So this is a pretty important video as a lot of questions I get are related to strategies and portfolio allocation. So let's dive into this. This is going to be a pretty important video. So first of all, we have the noobs. Now this and the next strategy is what the typical crypto punter is. So don't do this, but the typical noob, they basically buy up a couple of mainstream ones like Bitcoin, Ether and Ripple, because that's all they know of or think exist, and that's what their waster mate Dave down the pub has told them to get into. And pretty much that's what everyone does. They either get it through eToro or Coinbase, and then they just leave it on Coinbase. So yeah, you're not a noob, don't do that. We also had the old track away. Now, this used to be valid information or a valid strategy. However, from 2017 onwards, the whole market shifted because up until then, pretty much every currency was, or every crypto was a currency. However, from 2017 onwards, we now have loads of different sectors. We have application cryptos, decentralized storage cryptos, currency. We have all sorts of different sectors. So simply buying up the top 20 will give you an inaccurate snapshot of the market, because you may have, 10 currencies and a few application development platforms and not much of others. So yeah, that means buying the top 200, you can't go wrong, because you will basically have the top 20, 50 or 200 biggest coins, so to speak. But there is a better way around it. So let's have a look at the different strategies which our community deploy. So a strategy is being a cheapie hunter. So this is where you search for cryptos which are sub 20 cents or even sub 50 cents, but they're between 5 and 20 million market cap. And that's and all you're trying to do is basically find cryptos which have just launched or pretty new, and they're gonna go places. And the reason $5 million is the lower limit is basically you don't want to run the risk of exposing your money to something which isn't going to take off. So there are hordes of cryptos which are below $5 million market cap, and they just stagnate and do nothing because there's no interest. And also a little add-on to that is that daily volume actually should have been, if I just add in here, daily volume needs to be greater than $100,000 per day. Okay, so that's quite important. The reason being is that you don't want to get in a crypto which looks great, but then if there's no volume, you can't sell it or buy it at the price that you want to get in and out of. So that's that. They're the cheap hunters. Then we have the snipers. So this is basically where you buy up a handful of cryptos to just hodl until the market pops, and these tend to be very good ones with real world utility, etc. And then once it pops, you get out. Or you get out before it pops, and then you hoover up once the devastation has settled. And this is something which I see a lot of the older or veteran investors do. I say veteran, not in terms of human age, so to speak, but the amount of time you've been investing in cryptos. Because what tends to happen, and I did this myself, you start off and you buy everything, you end up with 200 different cryptos, it becomes a chore to maintain and manage, and so you then go, screw this, I just want 10 of the best cryptos and I'm just going to hold and keep things simple. So yeah, I'm personally moving towards being a sniper, sort of a cash flowing sniper, which will make sense in a bit. You then have the aggressive. So this is where you have a pot of funds to be super aggressive with. And typically what I do is I look for cryptos which are about to break out in price. I get in before the breakout, and then once it's doubled, I then pull out my original funds and then move on to the next one. So I then end up with a whole bunch of free cryptos. And then also in the hope that I tend to be aggressive on the cheapies, so hopefully I'll then end up with a cheapie with a load of free tokens, and then they grow to be something quite big. You then have cash flowers. So this is where you only buy cryptos that spin off a cash flow, and typically in the crypto space they spin off cash flow on a daily basis, and then you can either buy more of the cash flowing asset or divest into others. And basically the Kryptonian portfolio is a nice mix of all of it. So here is an example or a guide. You can have 30% of your portfolio in hodlers, 20% in smart index tracker. I'll explain that in a sec. 20% in cheapies, 20% in aggressives, 10% in cash flowers. So let's go through each of them one by one. So hodlers. So I guess a form of like sniping. These are the ones that I love and I hold. Well, for the moment. I mean, this is a ever-changing list. It changes at the moment probably every 3 to 6 months, but some of them have been there for a while, like Neo and Cardano, etc. So yeah, so we have Neo, ADA, so Neo, Cardano, Tron, Omizigo, Ethos, Nano, and 4. And then eventually, when they come online, VeChain, Thor, Ontology, and then the Neon Exchange. And all three of them are cash flowing cryptos as well. So that will be pretty cool when they come online. You then have the smart index tracker. So now we have loads of different categories, just like the stock market has tech stocks, pharmaceutical stocks, financial stocks, etc. Cryptos now have all of its own. So we have currencies, general purpose platform, distributed storage, distributed computing, privacy, prediction, Internet of Things, exchanges, application development, identity, payment platforms, and lending or crowdfunding. So obviously you can have a couple or no more than 3, or you can have more if you have enough funds. You don't want to dilute your funds too much, but basically have a few of the best ones within each category. That way you're having a better snapshot of the whole market. So when this rising tide starts to rise, you're getting the best chunk of all of it. Also, if a particular sector booms, then you know that you've got some. So for example, I think privacy coins are only just going to go up, especially when we have a whole world of regulation and stuff clamping down on cryptos. It'll just push people into privacy coins, especially the black market. So the prices will just go up. I mean, just look at what Monero has done in terms of price. So yeah, that's the smart index tracker. We then also have the cheapies, as I said. So you can put 20% there and then 20% in aggressive. So for myself, I'm aggressive on cheapies. So technically, I have 40%, which is giving me nice aggressive type growth. And then you can have 10% cash flows if you wish. So it's smart, cash, Neo, and then those ones which are yet to come online, VeChain, Thor, and Ontology, and Next. In fact, technically speaking, Ven will turn into VET. It's VeChain at the moment, but when it turns into VeChain Thor, it'll go VET. So yeah, that's that, and that is the Kryptonian portfolio. Now, this is completely your call how you do this. I mean, this will give you a nice overall exposure of the market. So here, as I said, 40% is really gunning and grow, and you can have some really big growth here, whereas everything else is nice and tickety boo. However, if you could have all 100% sort of hodlers, well, like I said, I'm sort of moving towards being a cash flowing hodler or cash flowing sniper with a bit of smart tracker. But yeah, it's completely your call. So yeah, hopefully that makes sense, and I look forward to seeing how all of you do.